Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the mid-week market update. This is going to be a wide-ranging topic video, including correlations. I'm going to start with correlations because those will probably be a very popular topic for the entire year, whether it's decoupling to legacy, recoupling to legacy, TradFi, or commodities or the 10-year. This is, for whatever reason, something that is in the forefront of many people's minds, let's say, just because the Bitcoin narrative and the Bitcoin story has been a decoupled vehicle from TradFi and legacy historically to some degree, where that correlation gained significant momentum in 2020, lost some steam in 2021. Now here in 2022, we're seeing still this continued correlation. So it's definitely worth watching, don't get me wrong. And this is just, some cherry-picked range. This is the 8th of January, basically year to date, almost to present. And you can see slowly we are decoupling here, at least attempting to. You can say there's a degradation of S&P and NASDAQ in this case to Bitcoin and Ethereum. Bitcoin outperforming Ethereum here by quite a wide margin for the past week or so. Obviously, the events in Ukraine and Russia and SWIFT and just being disconnected from global markets, if you're a Russian or Ukrainian citizen, for the most part, has certainly spilled over into Forex markets, including crypto. So I just want to take a moment just to show what's happened here. This was Crimea. So when Crimea was annexed in 2014, this was the dates according to Wikipedia. I don't know exactly what happened here, if there was some sanctions or banking regulation. Something happened obviously here that I should have looked into it, but I just didn't have the time to look at it. But anyway, all of that is almost equal to what's happened recently with the ruble, which is now below a penny against the USD. So the question or hypothesis is, where does that money go? It's got to go somewhere. Does it go into crypto? Are we seeing that? Is there a escape hatch effect into crypto? And we can look at that in various ways. Here's Ukrainian hryvnia. I'm going to butcher that, so sorry, but not as dramatic of an effect there. But obviously, an invasion has quite an impact on the country's currency against other currencies. And they too, as a refugee or someone fleeing the country, can use crypto for banking needs, payment needs. Here's a ruble against CNY, so it's obviously not just a USD. This is a global flee from the ruble to anything, including the CNY, including USD, including crypto. So we can look at on-chain volumes, if there's any, or we can look at exchange trading volumes, if there's any, which there definitely was, and we'll take a look at that. I just want to highlight as well the Moscow exchange, obviously plummeting. This was closed a few times. They halted the ability to short sell the market. So this isn't even a pure example of what happened there. But again, the money's got to go somewhere. And where does it go? So we can look at Tether, we can look at USDC, we can look at Bitcoin, obviously, which we will, along with ETH and everything else. But the effect of global financial disruption was profound and certainly seems to be a cause and effect situation here. Obviously, correlation isn't causation, but the first thing I like to look at is Tether on specific exchanges. This is just Kraken at the top here. This is Tether against USD, and sometimes Tether will vacillate above or below $1. In this case, it did not on Kraken specifically. Fine, no issues there. So maybe this is a localized issue. This is just the Bitcoin price here. And you can see, obviously, we popped up regardless of what happened on Kraken's Tether pair. If we go to Binance, though, which has a significant amount of Russian individuals trading there, including the ruble pair, which they have pairs for. They also have pairs for UAH, which I'll look at in a second. But this is USDT against the ruble. And there was clearly, whether or not this is trading or individuals exactly, is always hard to tell. It's Binance, which volume is iffy at best. So it's always hard to tell when looking at this stuff, and keep that in mind with a grain of salt when you're seeing all these headlines of volumes XYZ. But there was clearly a price effect here. Here's the range for the USDT ruble against the ruble, rather. Massive massive day against the ruble, massive day against the UAH, albeit on very little volume, especially relative to what happened in all of 2021. And you could rationalize this and say, well, who's buying rubles here? Maybe this was an order book issue where there was a thin ask side spread, whatever. There are all sorts of potentials here, right? I didn't dig into this super deeply, but very clearly price is having a massive day against the ruble and UAH. BTC ruble almost back to all-time highs against the ruble. Because again, if you have the ruble right now and the ability to do so, you wouldn't be necessarily selling into that, most likely, depending on the events here. Again, volumes are arguably negligible relative to, volumes in May, June. Again, this is Binance, caveat, asterisk. But clearly, price is telling you what's going on here. And definitely had an effect, whether that's the Forex effect in general, whether it's algos and arb trading, whatever. There's clearly something going on here against the ruble, not so much against UAH on Binance. So this also tells me, there probably are a significant number of Russian traders or there's just deeper markets on that pair than the UAH. But even still, UAH and ruble BTC pairs look much different than the USD pair, which has done phenomenally well. Yesterday it was up 10 to 12%, whatever it was. Certainly not up to this degree as a percentage, right? But very clearly there's an effect here. And just as sort of a control, we can look at the BTC against the euro on Binance. And again, you're not seeing that massive volume come in. You're not seeing price sort of out of whack relative to the USD pair. So something obviously happened clearly, right, with those pairs on that exchange. And I don't have granular data for exchanges in Ukraine or exchanges in Russia, should they even exist in Russia at this point in time. But I'd imagine you'd be seeing similar effects. From there, we can always look at, this is Tether transfers on chain. And one thing I thought I'd see, and we'll probably still see eventually, is Tether halting transactions. So unlike Bitcoin or Ethereum or many other chains where largely they are decentralized, Bitcoin more so than everything else, but the transactions themselves cannot be halted, cannot be clawed back, cannot be stopped. At the on-ramp and off-ramp or the exchange side, they can be seized or frozen. Many of the exchanges have said publicly that they will not do that, including Binance, but they may be forced to do that eventually due to law enforcement reasons, right? And we've seen that with Tether, which is why I thought I would see Tether come out and say we had to ban these transactions today, or we had to freeze these addresses, which they have the ability to do. But this is the transfers, and we're not seeing massive upticks here. Slight uptick in USDC, but generally not much is going on there. If we look at transaction counts on BTC, you don't really see, you couldn't point to this chart and say, oh, this is where Russia invaded Ukraine and we saw this massive use of on-chain XYZ, right? You don't see it on-chain. So I'm a little suspicious when it comes to the ruble and UAH pairs, but very clearly the outpouring of crowdfunding towards Ukraine was done on-chain. It was 25 million or so at this point. And we can see that there's an address for it. This doesn't necessarily mean we're seeing massive increases in on-chain activity from that region, but it also doesn't mean that these people in that region aren't using crypto, because they clearly are. It's just always good to have backup evidence for that because we can see it on-chain, so why not take a look? Active addresses still marching down slowly here, still within the range, right? None of this is in mega ultra turbo bear territory like it was post 2018, where it was just straight down, elevator up, elevator down. We're still well within ranges of the previous year. The same with transactions, which are slightly different for BTC because you can transact Lightning now, which isn't going to show up on a chart like this. So off-chain means, for example, won't show up on charts like this. Hash rate, there was some concern from various people that the hash rate would be affected by the Russia-Ukraine stuff. I don't see that impacting this directly at the moment. This was February 17th, was all-time high. But as energy costs rise globally, we may see some disruptions in hash rate. On the other side of that coin, miners in the US, for the most part, have already paid for their miners, have already paid for their electricity. So we may not see anything on a day-to-day basis, but maybe a quarter-to-quarter basis if we get runaway costs for energy, stuff like that. But at the moment, again, you couldn't point to this and say, okay, here was where Russia invaded Ukraine. You just don't see it in the hash rate or on chain for BTC. Here's ETH, number of transactions, weekly average. ETH actually broke a multi-month low for transactions, which sounds bad, but it's actually still in the previous range of the January 18th all-time high. So it's still transacting way more than it even ever did relative to most of its life. So it's still impressive. Obviously, if you're bullish on anything, you want to see on-chain activity rising rather than falling. But I think it's important to put it in a context relative to what's happened historically. For ETH post blow off top, let's say. Here's active addresses again on ETH, well within the range of 2021, despite gas fees being what they were in 2021. Gas fees since 2021 rolled over have declined significantly, but you're not seeing a decline in activity regardless of what's going on, right? So on-chain or active addresses are still good to go from that perspective. You just never want to see, if people claim, oh, it's a crypto winter, right? You don't want to see no one care about anything, everything just shrivel, right? You're not seeing that in VC interest in investing. You're not seeing that in TVL. I don't have that chart up in DeFi. You're certainly not seeing that on-chain for anything as far as the big coins are concerned. And because Bitcoin is in the global conversation now, it certainly had a role in that escape hatch or exit valve for the ruble or UAH. Switching gears to more technical stuff, if we look at Bitcoin dominance, this is just Bitcoin versus the world relative to market cap. So Bitcoin's market cap versus everything else, including stablecoins, I believe is how TradingView calculates that. But leave them in, leave them out, doesn't matter. Ultimately, historically, if you're looking for a signal, I've found that anything above or below the 200-day moving average basically tells you the entire story. If altcoins are doing well, it typically means that Bitcoin dominance is below the 200-day moving average. People like to call this alt season or altcoin season. I've coined the term Bitcoin season because when BTC rises above, dominance rises above this level, BTC typically outperforms altcoins. So we're seeing that slowly. We're seeing this descending, broadening wedge potentially fill in here. Maybe this goes back to 55 plus, where it's lived previously. It doesn't mean Bitcoin's going to go up and alts are going to go down. It just typically means Bitcoin's going to outperform here. And certainly that's what we've seen over the past week. Obviously a very small sample size recently, but this also has a triple bottom for the technical people out there. It's got inverted head and shoulders. It's got all sorts of bullish or reversal technicals going on. And to contrast the DeFi or BTC dominance with the DeFi perp, which is an index of market cap weighted DeFi coins put together by FTX, you can see we're still in this massive range for the DeFi perp. There's always this risk when you leave a range to the upside or the downside that you're just going to keep going, right? That instead of ranging, you're going to create a trend. Clearly, there's an intra-range trend going on here, both up and down, as we zigzag all over the place. But this did find the bottom so far with a bullish divergence on RSI, which just means that you're seeing less momentum at those lows. So this is reminiscent of panic selling, capitulation, that sort of thing. Similar, not exactly to what you saw in June, July, which was May, June, July, really, which was forced liquidation type stuff. But we're still bearish on trend, on range. We're sort of at the bottom of the range as far as DeFi is concerned. So DeFi could rubber band back to this range, rubber band back to the 200-day moving average, rubber band back to this VPVR level, which is just showing you volume at price rather than volume per day. So as bottomy as Bitcoin looks to me with this W, right? We see this all the time. W for win, M for murder is the saying. DeFi could also do decently well into Q2, which is when altcoins historically have done pretty well. Q1 is generally when everything lifts off together, historically, based on seasonality. Certainly not a guarantee for this quarter, but something to watch for and think about. Something else I was watching last video was this downtrending pitchfork. From a technical level, this is just a trend channel. And how this works is we're inside of it until we're not, but it tells you the mean or the average you'd expect the entire time. So you can see we've gotten out of this before and sort of rubber banded back. What we really need to do here is start making higher highs to confirm this bullish reversal, because we could very easily just meander at 40 to 46 for another month without really getting anything done from a trend perspective. And if we zoom way out, none of this really matters because it's all noise. Essentially, since 2021, we've been in the same range. It's crazy to think about. This range is larger than most of Bitcoin's price history, because most of Bitcoin has been sub 18,000. And now we're talking about a range from 30 to 60,000. So if you're trading this day to day, obviously it's a bigger deal than to a lot of people who've been here and are just sort of riding it out, right? So we've got another pitchfork here, massive time frame from 2019 to present. And again, this is telling you a rate of change that so far has pointed up and to the right, giving you overbought, oversold perspective within this range, giving you expectations of the mean. So we've got that superimposed onto this range, along with this double helix of 5,200 crosses, which may cross bullish into Q2. One possibility here is that this W performs as expected as a double bottom. We start to break horizontal resistance at around 49.50K. And then we attempt a move towards the top of the range. While we're in a range, to me, that's all I see. I don't see anything else in the near term. Obviously, in the long term, this thing has played out beautifully to the upside. But the first thing we need to do is get back to the middle of the range and then test the top of the range. And then we can talk about stuff like 80 to 100K, right? But if we measure this out using fibs, take the high, take the low, we get this range of 85 to 100K essentially, right? That's the expectation if we break the highs. We are very far away from that though, right? Currently, we're still figuring out what sort of bottom this is going to be. We sort of shrugged off this head and shoulder breakdown. We canceled this inverted head and shoulders on low time frame. So we've got a lot of stuff that we're dealing with on a technical level. And the middle of this range is somewhere around 47K. So this is all just stuff that I'm thinking about, right? I'm just thinking about this range. That's all that really matters to me. As long as we're in it, I'm comfy, I'm cozy. And as we start to get towards these highs again, right? I might be bullish and wrong over and over and over, but it's very difficult to see this at the highs and think, man, this is so bearish, right? That's usually not how markets work. So one thing in the interim, though, is if you're familiar with the cloud, a lot of people asked me to talk about this in the last video, but if you're familiar with the cloud at all, it's just a trend metric that's telling you if we're bullish, we're above, if we're bearish, we're below. And it gives you some direction bias and support resist levels. We'll just leave it at that. But one of the trade setups in the cloud that you can look for while you're in the range is this move through the cloud, which we've actually had 4 examples of in the past year, 3 examples of in the past year. We're setting ourselves up for the 4th example this year. So it would not surprise me to see a move to somewhere around 51 based on what the cloud is painting, because it's a 50% retracement of the range. That's all this is. We've seen this over and over and over again, and we've seen this for years, right? This isn't anything new. This is why I talk about it all the time. When it happens, this could take many months, many weeks, like it did in Q1 2019, right? This looked very good. It had a chart pattern on its side, as it typically does, but it took a while to play out. So you almost always, with a trend reversal, are going to see some sort of chart pattern, some sort of reaccumulation, redistribution, something, right? Here was accumulation, distribution, accumulation, people getting in and out of the market slowly, especially if you don't see that blow off top, which is what we didn't see. And just to illustrate, this will happen on a mega time frame. This is 2015, 2016. Again, you'll see that same type of trend reversal with what's called a Wyckoff accumulation, which doesn't mean anything to you if you don't know anything about technicals, which is fine, but it's just a type of accumulation here into more accumulation through the cloud, right? And if you've never seen this stuff, you're thinking, okay, this guy's crazy. This was Bitfinex hack, by the way, which is a blip at this point in time. But my point is here, we are on our way for a trend reversal. There's no denying that. This is how it looked, on the weekly 2020 and 2019, 2018. And it's very, very important that we don't M for murder here. If you're a long-term bull, right? At least within the next year, because we don't want to set the course for the opposite of what we did in October 2020, which is we got out of this cloud. It's referred to the cloud partially because this is just an area of uncertainty for trend. This is just a range-bound expectation. So lower time frames, we're Wing out, we're double bottoming here. We're preventing this M for murder, which would almost certainly result like it always has. So it's good to see this stay within the range. Bouncing on key areas technically that you'd expect, you'd want to see if this thing has some legs in the future to the upside. And then lastly, I'll just mention ETH, all the similar TA applies, the same TA applies. It has a chance for this 5200 crisscross. Obviously hasn't performed well as BTC in the past 2-3 days. But targets are very similar for ETH's case, just somewhere in the range, right? Back to range highs. ETH has a smaller range to the upside than BTC, but ultimately the target very similar. The 5200 cross, very similar. And these are all definitely things to watch for within Q2. I expect we'll know an answer to this within the next couple of weeks as far as continuing trend-bound activities price-wise versus mega ultra turbo bearishness, which certainly doesn't look to be in the cards at the moment. That's all for this one. Would you like what I miss? Like, dislike, comment, share, subscribe, and happy trading.